Let me ask you a question. Do you like it when there's a little drama in the stock market? Because I know I certainly like it when there's drama in the stock market. And oh, do we have drama, ladies and gentlemen? NASDAQ is down 9.6% from all-time highs, right around that 10% mark now at this point in time. The Dow Jones Industrial Average has lost 5,000 points from its all-time high now at this point in time. Remember a long time ago, as in 2025, do you remember what was talked about in the stock market last summer into the fall time? It was things like, is the stock market overvalued? How overvalued is it? It's richly priced. We're in a bubble. All those sorts of things. Well, let me just say that all of that stuff has been killed off now at this point in time in regards to the stock market. Now what people are talking about is not, is the stock market overvalued, bubble, all those things. Now there's recession worries. We have this word right here. We call it the rod wave. Okay, that word right there. We're dealing with that. CapEx is completely out of control. These are the subjects that are dominating the stock market this year, and why we're seeing so much weakness. We've seen trillions of dollars wiped off the stock market just in the past several months, right? So this is a very rare Friday upload for me, okay? But given we got market drama, I'm going to do what it takes. And if that means a Friday upload, we're doing a Ferrari Friday upload, ladies and gentlemen, okay? So, three core subjects I want to get into in this video here today. Number one, the economic worries. Are they legit? Are we going to go into recession? Are we not? I'm going to share my opinion perspectives there. Number two is a huge move I'm looking to make in my portfolio, a massive sell. And when I say sell, I'm talking 100%. And we'll talk about where I'm looking to put that money. Additionally, third subject we're going to get into here today is how much lower could the stock market go? We've already seen 5,000 points knocked off the Dow. The NASDAQ's down almost 10%. How much lower could we even go? Or are we near the bottom right now? We'll get into all those subjects here today. I hope you guys enjoy this Friday upload. This is so dang rare for me. One thing and one thing only need from you. Just smash that like button. I hope you could do that for me. I appreciate you in that biggest way for every single person that does that. Also, make sure you subscribe to the channel. We are now over 920,000 subscribers strong on this channel. I appreciate each and every one of you for being here, okay? Alrighty, ladies and gentlemen, let's get rolling. Listen. Unemployment rate. The unemployment rate right now is right around, we can call it about 4.5%. Now, with the unemployment rate, a lot of people look at this as a lagging indicator. They say, okay, it's 4.4%, but if the economy gets a lot worse, next thing you know, that'll jump to 6% quick, right? That's a fair debate. That's a fair debate. But as of right now, at least, it's about 4.5%. And I feel like that's a pretty good unemployment rate. Like that's what you should expect in a decent to strong economy, right? If you're in a weaker economy, you really go over 6%. If you're in a horrible economy, you'll approach like a 10% number. That's like disaster, right? Like the only time we really had a 10% number or above was Rona, when we had all the shutdowns, and I'm talking about in recent history at least. Rona, when we had the shutdowns, obviously, right? Mass amounts. I mean, heck, my city I live in alone, Las Vegas, like the whole strip closed, right? So anybody that had any job in relation to strip, was laid off during that particular time. And then the other time period in recent history we had an unemployment rate reach around 10% or above was in the Great Financial Crisis. So that's something that very rarely happens. But 4.5%, that's not too bad, right? Now, there's a very underrated thing I like to look at in regards to the economy, understanding money, and money velocity. This is very important. The velocity of money is the frequency at which one unit of currency is used to purchase domestically produced goods and services within a given time period. In other words, it is the number of times $1 is spent to buy goods and services per unit of time. If the velocity of money is increasing, then more transactions are occurring between individuals in the economy. This is something you really want to see. Listen, I am fortunate to have a lot of money nowadays, right? Okay, I could sit on all my money. I could decide to not ever go out to eat. I could decide to not go on vacations, never buy new cars, never buy new homes, never buy new furniture, never spend on landscaping, and so I'm just hoarding all the money and sitting on it. That doesn't do good for the economy. We all have to be spending with each other so we can keep the show going, right? Otherwise, everybody starts doing worse. And so velocity of money is one of the most underrated things, I think, in economics in general and with the economy in general. And the worst thing that can happen is everybody decides to, if all of a sudden tomorrow everybody decides to stop spending, what do you think is going to happen to the economy? It's going to be a complete disaster. And what do you think is going to happen very shortly after that? Everybody's going to lose their job. No, there's going to be no jobs. There's going to be no taxes. There's going to be no nothing, right? Just civilization over. The show has to go on by people spending and that money getting spent around and around and around, right? Now, look at this. This is very, very fascinating. Do you see the trends I see? This is crazy. Check this out. In the mid-90s, basically, velocity of money kind of peaked out right here, right? And then we went through a several decade, just kind of like lower lows. And you had some bounce backs in velocity of money here and there, right? This was like prior to the great financial crisis, but the overall trend was clearly down. There's not even a debate. The overall trend was clearly down. And finally, the trend ended during Rona. Like crazy, right? The trend ends during Rona. And since then, we've been actually in a nice uptrend. Now, here's where things get very interesting about this velocity of money. Look where we uptrended to. We've uptrended just roughly in line with where velocity of money used to be. So it's not like we got some new crazy all-time highs here. It's just worth noting, right? So the velocity of money, could we be at a peak right now and about to head down more? That's a debate, right? So just something to keep an eye on in regards to velocity of money. Next thing I'm showing you is the Federal Reserve's balance sheet. Now, this is another thing that's very interesting. I don't know how many people have been watching this. The Fed balance sheet peaked out right here at basically the beginning of 2022, right? Now, inflation was going crazy at this particular time, and the Fed decided they needed to start basically shrinking the balance sheet. They just started to raising interest rates at it, make a whole host of decisions. Now, I believe this increase right here in the Fed balance sheet, I believe that was around SVB time. And we had some regional banks that collapsed. If I recall, that was the kind of little pickup there. But the overall trend in the Federal Reserve balance sheet is lower and lower and lower and lower and lower, right? In terms of shrinking the size of the balance sheet from its ridiculous, about $9 trillion there, during that whole insanity. Now, something really interesting has happened recently. Look at, just in the past few months, this has actually started to increase. So the Fed is actually starting to increase the balance sheet again, which you could look at as, some people could look at that as, oh, that's a good thing. That means there's going to be more money sloshed out there, more money to go around. But it is interesting that at the same time, like the Fed has started to actually increase the balance sheet a bit, we've also started to downtrend the stock market. That's interesting because usually you would think, if anything, it was the opposite. Like if anything, you would think, oh, the stock market had to just go down this whole time, and now the Fed balance sheet is increasing again. Now the stock market goes up. It doesn't really work like that, right? But it does make you think, the Fed's starting to increase that balance sheet again. Are there things going wrong? Because usually what happens is when times are good, the Fed can shrink the balance sheet. And when times are bad, times are tough, the Fed starts increasing the balance sheet. Keep in mind, these trends can be going on for quite a while, right? This was a trend that went on for a significant amount of time in terms of, shrinking the balance sheet. Then we had Rona, and then that went through a several-year upcycle for increasing the size of the balance sheet. Then we went through a several-year down cycle for the Fed balance sheet. So if you had a guess, we might be on a several-year increase in balance sheet, which means maybe there's something coming, right? Just something to consider in regards to that. Okay, next up here, government jobs. Listen. It's been very messy the past year with government jobs, right? We had Doge, then we had government shutdowns for quite a while. Now we have TSA. I'm so happy I'm not flying, and I hope none of you guys have to fly anytime soon. I've heard it's a disaster out there. This is a picture. It's posted on X. By the way, if you ever want to follow me on X, I have it always linked in the description area down there. I post stuff almost every single day on X. But I believe this was the Houston airport. It's out of control. Right? Look, I see something like this, and the first thought I think of when I see this picture right here, I don't want to fly anywhere. So even if I was thinking like, maybe I'm going to book a flight in the next month or two to fly somewhere and go spend some money in a different city. Oh, no, thank you very much. No, I'm not dealing with all that. Forget that. And this has to do with TSA employees and all those sorts of things, right? Check this out. Massive TSA lines at LaGuardia Airport in New York City. They stretch into the parking lot. I mean, yeah, if you can avoid an airport in the short term, avoid airports in the short term. Or you better be ready to binge watch a lot of my videos and while you're in line, because it might take you, 3, 4, 5 hours. Like, who knows? This is ridiculous in regards to that whole situation, right? So that's something that, if people are looking at this, they're like, why do I want to travel anywhere? Why do I want to spend money? And then you start worrying about money velocity slowing down. Money velocity slows down. It's not a good thing overall. It's not like something that ends the economy. It's not ideal. You want to have money moving around, circulating, right? Now, what about public perception? So public perception suggests the U.S. economy is getting worse. Well, with 59% of Americans holding this view as of March 2026, driven by rising gas prices, that's not a surprise, and inflation. However, economic data presents a mixed picture. Although consumer sentiment is pessimistic, the economy has continued to show growth. Inflation's a big worry, right? Inflation has been an issue with the consumer, and the consumer is just a fancy way of saying Americans, right? Or, people even around the world, but I'm really talking about Americans here. Inflation, it's been an issue for years. It was pretty much a non-issue for a bit, and because gas has all of a sudden gone up so dramatically again, it's an issue again. And literally, inflation numbers were done. But because now gas prices have went up so much, it's now, potentially going to bring up the CPI. It could potentially even bring up the PPI, the producer price index over time as well. Because, at the end of the day, when we're talking about oil prices, that goes into everything. So, and then there's worries about, okay, inflation goes higher. Fed has to remain with higher interest rates than people would like, right? I mean, it's just not a good dynamic. It's not a good dynamic. So you have a situation here where the 10-year has been going up. Meanwhile, there's a lot of worries about the economy getting a lot worse. What is that? If you have an economy that's getting worse and you have rates going higher and inflation going higher, what is that? It's an ugly word, and you learn this early on in economics when you go to university. Hopefully you learn it before you go to university, but most people don't learn it until you go to university. Most people might not even know it. It's called stagflation. If you have a worsening economy, higher inflation, higher rates, it could be very, very ugly. So you can't say we're in stagflation right now, but you can say there's ingredients that make you scared that we could go into stagflation. And that's something no one wants to see. People say, okay, we can deal with inflation, but stagflation? Higher prices and, a bad economy? Oh no, that would be disastrous, right? We got through 2022 in that mess. You know how? There was such a huge pumping of money out there in 2020 and 2021 that the economy was able to stay alive in 2022 despite that ridiculous inflation the consumer had to deal with in 22 and then into 23. There was such a money pump out there. Also, you had the reopening, so there was a lot more jobs that came back, and so we were able to stay afloat. If it wasn't for that, we would have been in a lot of trouble. But you can also say we would never had that insane inflation without the crazy money pump out there and all those various factors. And then commodities going on a several-year insane bull cycle from the lows they hit around that April-May timeframe of 2020 into 2022, essentially, right? Now, this is the United States Michigan Consumer Sentiment. They've been doing this survey for decades. I just want to show you the last decade, the last 10 years, okay? Now, if you're above a 95 reading for consumer sentiment, that's great. That means you got a truly great economy. And I can say the best economy, I feel, and when I say the best economy, I'm talking about for the masses, the average person. I don't care if you're rich. I don't care if you're middle class. I don't care if you're even, under middle class. But the best economy I've ever seen in my adult life, which my adult life started in 2008, was, I would say, kind of in that 2017 to 2019 timeframe. We, had very low unemployment. Inflation remained pretty darn low. There was a lot of optimism around the economy in general. And man, I just look at that 2017 through 2019 timeframe as kind of like my adult life's best economy we ever saw, right? And then Rona happened. And ever since then, it's been a mess. Basically, if you're in the 85 to that 95 range, you've got a very good economy and consumer sentiment, right? And remember, it's consumer sentiment is really made up of, can you get a job? Or do you have some money left over at the end of the pie, right? That brings up consumer sentiment. If people have good jobs and they're not being sliced and diced by inflation, they got some money at the end of the month so they can go on vacation, they can do this and that. And I'm talking about the average person. That's what really makes consumer sentiment high, right? If you kind of go in that 75 to 85 range, you're in like a meh economy, I would call it, right? From at least a consumer sentiment perspective. If you go in that 65 to 75 range, you have bad consumer sentiment, which means you likely have a bad economy, or a combo of like, people have jobs, but they have nothing left over because they've been sliced and diced by inflation. And if you go under 65, you got a disaster. Listen, over the past several years, we've been in disaster, like straight up. And we're in disaster right now as well. Now, with that being said, unemployment still remained relatively low. Companies have still been able to put up numbers even with disastrous consumer sentiment. But if you want to look at this, we can look at everything from a positive or a negative perspective. If you want to look at it from a positive perspective, listen, we got a long dang way to climb. And it can't get much worse than it is. Like literally it can't. Like consumer sentiment's so bad, it can't get much worse. And so consumer sentiment could come back in quite a significant way over time, right? Step by step, step by step. Okay, next up here, data centers. Now, this is really good news. Really, really good news, okay? All these companies are spending a fortune. We all know that. A lot of that money's ending up in NVIDIA's pocket, but you have to build these massive data centers. And they're being built all over the United States by so many different companies, right? Obviously, Amazon, Google, Meta, Microsoft, companies like that are some of the big ones. But these insane data centers don't just magically get built. They're built by humans. And humans using massive cranes and, machinery and Caterpillar equipment, all this stuff, right? And so when you have these huge data centers being built, it creates a lot of construction jobs and a lot of jobs in general. And so that's the good news we have for this year and at least in the next year is you've got data centers all over the United States of America being built, and these don't build themselves. You need a lot of people to build these. I watched the TSMC facility go up in Arizona because I have a house in Arizona that's probably about, let's call it 15 minutes away from the TSMC facility, right? And I watched that be built when we were kind of using that house as like a vacation home. It was unbelievable. Unbelievable. The amount of jobs this TSMC facility produced. And they're building more facilities around it as well. So do keep that in mind. But it was shocking. Like I would go there and it was just vehicles everywhere from how many construction workers would be on this project. So stuff like this, TSMC facilities, all these data centers being built all over the United States, there's no doubt that's very, very good for the economy. That means lots of construction jobs, lots of jobs from indirect jobs, and then those go ahead and create more jobs off of those, either directly or indirectly. So that's a really good thing, right? If Amazon and Meta and Google and all these companies were using the money just for share buybacks, that's not good. That means the companies are just, basically using all that money and just pumping it back into share buybacks. It doesn't really do anything for the economy, right? It does something for the stock price. Earnings per share can skyrocket in that dynamic because you have share count going down while your net income's increasing. Phenomenal. But it doesn't really do anything for the economy. All these companies want to spend all the money coming in right back into the economy. Hey, that we're talking, right? Now, another thing I would tell you guys, you gotta always pay attention to, one of the most important things if you want to judge the economy is new housing starts. And the housing market in general, is very important to the economy, but new housing starts is huge because every house that built, oh my gosh, the amount of direct and indirect jobs that go into building a house is unbelievable. It's unbelievable. Like how many trades and how many companies make money off that. So in regards to this, housing starts have not been in the best place the past few years, and it's been getting worse. But if you want some optimism, the past few months have gotten better in regards to housing starts. So, or I should say the past few quarters. So, there might be hope in regards to this. Just something to kind of keep in mind there. Now, this brings me to a phenomenon in the stock market, because the stock market is talking so much about the economy right now, right? And it's what I just showed you there, the chicken or the egg, right? What came first, the chicken or the egg? And it's like, dang, that's a good question, because the egg would have to come so then the chicken could be born. But then you're like, well, where'd the egg come from? Like, that's kind of confusing. It would have to come out of the chicken, right? So, yeah, what did come first, the chicken or the egg? It's a confusing little dilemma, right? And I have the same dilemma in regards to stock market, where every time it seems like the stock market goes down, people worry about the economy. And so you got to ask yourself, are people in the stock market worried about the economy because the stock market's going down? If the stock market wasn't going down right now, maybe there wouldn't even be any concerns about the economy. Maybe everybody would be fine about this, right? So that's an interesting dynamic. The way I look at it, in my opinion, you cannot make a good prediction right now on if the economy is going to get a lot better or a lot worse over the next 6 months. I just don't think it's one of those time periods. You have too many mixed signals. You have a jobs picture that's not horrible, but it's also not that great right now, right? You have a consumer sentiment that's in the dumpster fire, which you could look at it as a perspective of like, oh man, it's so bad. Or you could look at it from a perspective of maybe things could get a lot better over the next 6-12 months. So I just look at it as, I don't think you can make a strong case for the economy being really bad right now or really good right now. It just is what it is. And we'll manage and we'll move through it. Company earnings are pretty good. Are they off the charts great? No, but they're pretty good. We just had earnings season. We're about to get another earnings season. So, that's kind of where things are at in regards to that. I think it's a phenomenon where stock market goes down and everybody in the stock market starts feeling worse, and then they start looking at everything from a negative angle when it comes to the economy. That's just what I've seen in my 17 plus years being in the market, right? Okay, before we get into a huge move I'm looking to make and what's going on there, I want to let you guys know I recorded you last weekend a 35-minute workshop on how to manage your portfolio at every stage of wealth. I don't care if you got a few $1,000 to your name, tens of thousands, hundreds of thousands, or millions. I got a video that breaks it all down, what to do at each stage. It's a 35-minute beast. If you want access to that, it will be the pinned comment down there. Click on that, and then I can send it over via email or via text. However you want to receive it, we can send it over. But I think you guys really, really enjoy that workshop. It is absolutely free to access. Okay, so what's a big move I'm making? What am I up to here, and why? And where's that money going to go? Well, TSLZ. So this hedge, I'm looking to sell it all. It's about time. Listen, if the market's down Monday, it's moving time. Moving out of TSLZ. Moving out of it. So this is a hedge. I already took big profits in another batch of shares I had in this ETF. And I'm looking to take the rest on Monday if the market's down, that is, right? So $9,500 is what we're sitting on for total gain here, 21%. It's been a good hedge for me overall in the past few months. And let's just be honest, since I made this hedge, almost every stock's gone down. I mean, there's a few that have gone up, but I would say like the far majority of stocks are down, and most of them are down huge. So I feel thankful to have made a big profit on this, right? 20+% in a time period when I've seen, the amount of stocks that have gone down 20% plus since this time. Oh my gosh, that list is a mile long. So I'm looking to flip out of this. Now, listen, as soon as I sell it, that means Tesla's really going to crash. That's how it works. I feel like every time I get out of a hedge and take my profit, the real crash happens after that. And I'm like, yeah, why didn't I keep it longer, right? But the bottom line is, whenever I make one of these hedges, I really don't want to count on a massive crash, right? I'm counting on a market to downtrend, a correction, for me to make good money and move out of the position, right? And so, but yeah, I wouldn't be surprised if after I end up cashing, because like I said, if the market's down, let's say the NASDAQ's down 0.5%, 1% Monday, and Tesla's down 1% or a few percent, I'm moving out. I'm bye-bye TSLZ. And so, yeah, I wouldn't be surprised if then it really crashes. And then I'm like, oh man, remember I took $55,000 out of that? And then, and then it became $100,000, $75,000. Like that's how it works. Duolingo, I can't. The Duolingo put options, I would have made $300,000 more in profit. $300,000 more in profit if I just held through. I took a huge profit initial, thought I did so amazing, and oh gosh, was the big money ahead. Oh. Anyways, that is what it is, right? Okay, so where am I looking to put that money, TSLZ, after I sell and get my proceeds of, we can call it $55,000. Hey, hopefully Tesla's down a decent amount Monday, and maybe I can get $60,000 or something like that. Where am I looking to put that money? Well, in a few stocks. So, real quick here, I think this is cool. Fidelity always puts this like 52-week range for your stocks that are in your portfolio. Look how many of my stocks are at 52-week lows or close to 52-week lows. I like this. This setup is very, very nice, right? This means when we do snap back the market the other way, and We can debate if that's going to be a week from now, a month from now, 6 months from now, 9 months from now. But when we do snap this market back, oh my gosh, are you going to watch the public account make a move? Oh my gosh, you're going to watch it make a move. So I don't even have one stock that's close to 52-week high. Google's the closest thing. Google's at 300 right now, and its 52-week high was 350. That's the closest one I have. AMD's 52-week high was 267. That's 201. Yeah. Oh my gosh, the snapback in this portfolio is going to be insane. Absolutely insane. So now where am I looking to put that TSLZ money? Well, I would be looking to buy some more Honest, HNST. I'd be looking to buy definitely some more American Express. I bought some American Express actually this morning. I'd be looking to buy some more Adobe. I would love to buy some more Nike, but I might be good on Nike with where I'm at with that position in the public account. I don't mind buying some more Nike and other portfolios as well. But I would say Honest, I would say American Express, I would say Adobe will kind of be my main focuses when it comes to public account buys there, right? So anyways, that is what it is. Okay, third subject up here, how much lower could the stock market go? I think that's a fair question. Everybody's looking at it like, dude, how much? How much? Okay, listen. This news just came out a bit ago, right? Trump says he doesn't want the rod wave, doesn't want a rod wave ceasefire, right? He's considered winding down military operations. Now, some people are going to say that's smart. Some people are going to say T-Man's tacoing. By the way, most people that say T-Man's tacoing, almost everybody I know, like at least 80-90% of the people I know voted for Trump. And like they're all the ones that are saying Trump's tacoing again, essentially. So it's kind of funny that like even people that vote for Trump are basically saying he tacos in regards to these situations. But listen, the Dow's lost 5,000 points. Everybody knows Trump looks at the stock market heavily. He makes it no secret. I mean, he posts about it all the time, right? He's got, what is her name? Pam Bondi or whatever was talking about it when the Dow was recently 50,000. And she's like, the Dow's over 50,000. You should be paying attention to that, not the other stuff. So T-Man, if Trump's kind of ready to call this one off, the market could look at that as positive. But I think the market really wants to see the actions, because the market could be faked out here where like, oh, Trump says a lot of things, but you got to look at the actions. It's like just because Trump says, might do this, might do that, that doesn't mean he's doing it. And if you've paid attention the first term and even the second term so far, that's what you've seen, right? Sometimes he said he's going to do this and he does something else. So just because he says, oh, we might be winding down military, that doesn't mean they're going to. You've got to watch the actions. And so the market will be watching the actual actions. Is there anything actually going on here with actually pulling, military operations, winding them down here, or is this still going to be an ongoing matter, right? So that's what's going to come down to. If there's a real wind down, then, market might be able to start bouncing back, and we might already be hitting lows right around here. If it's not, then I think the market will continue to be concerned until there's actions proving what he's talking about here. So that's the way I would look at it. Yeah, that's the way I would look at it, right? And so we'll see what happens there, but the actions will matter a lot more than the words. Now, additionally, you're getting a lot of stocks that just really screaming deals. Now, I'm not just talking about like opportunities I like in the market, like ELF and like Celsius and some of those stocks, right? But I'm also talking about big dogs that everybody pays attention to. I'm talking to Mr. Softy, Microsoft. Talk about that a little bit on, I think it was a reaction channel yesterday. Forward P on Mr. Softy's 21. Meta's a 19, forward P. These growth rates are insane for these companies, like 15, 20% type revenue growth. 21, 19 forward Ps. That's interesting. Amazon 26 forward P for Amazon? I don't know about this. So the bottom line is even very, very popular stocks like Microsoft, like Meta, like Amazon are now extremely attractively priced. Now, are they steal deals? No, I wouldn't call them steal deals, but I would call them very attractively priced if you're somebody that wants to be along in these sorts of stocks. And when you start getting these sorts of companies very attractively priced, it's hard to push the market down much more, right? Now, could Meta go from a 19 forward P to a 15? Sure, all things are possible, right? It just gets harder and harder to push them down. I'll say that as time goes on here. So all things are possible. Meta's got revenue growth rates of 20+%. Now, Here's the thing. If Meta revenue growth all of a sudden implodes, and let's say Meta goes from 25% revenue growth where it's been recently down to 10%, 5%, okay, we got problems in Meta. Meta could easily go a lot lower, right? Because they got the crazy CapEx, and then all of a sudden if revenue's only growing 7%, uh-oh, night-night. But these stocks are attractively priced now at this point in time, right? No, I put this out to my private stock group recently. I said, always stay in abundance mentality. You can go through these time periods in the stock market where, your portfolio is not hitting new highs. Maybe it's even hitting new 6-month or 12-month lows. And you can start thinking in scarcity mentality and those sorts of things. Don't go over that side. Stay in abundance mentality. There's no shortage of money out there. The stock market, you're never going to make money all the time. That's just how it is. Ask anybody that's been playing this game for a long time. Never make money all the time. Sometimes you're going to go months, sometimes you'll go years between setting an all-time high in your portfolio and setting a new all-time high. And you have to be okay with that. And it doesn't matter how great of an investor you could be the greatest investor ever. And still, there's going to be time periods when for months or years, your portfolio is not going to hit a new all-time high. And you have to be okay with that. Stay in abundance mentality, folks. There's plenty of money out there. There's plenty of money to be made. And when it comes to your positions, if you own great companies and you bought them at fair prices or undervalued prices, it will be reflected over time. So stay patient in this game as well. Patience is everything in the stock market, okay? I appreciate you joining me for today's video, as always. Pin a comment down there today. Once again, get that free workshop. You can send it over via email or via text, however you want to receive it. That one covers basically how to manage your portfolio at every stage of wealth. I think you guys will really enjoy a lot of the tips and tricks and tactics and hacks I teach you in regards to that workshop there. Much love and have a great day.